gonna get some water real quick. And then we're hopping right into the next one. Back to back. Filming these back to back. I should have finished these a long time ago. I spaced them out because I have been living life and enjoying life as it should be enjoyed. There's always time to grind. There's always time to work very hard. But fortunately, when you trade, you can play golf, you can go hang out, you can go out, you can work. I like to work still. And life's about enjoying it. Do not get so caught up in all the hard work. Enjoy life. Time is all you have. So anyway, sorry to get philosophical there in the beginning, but high time frame to low time frame analysis, guys. So the reason why this is in advance is really because it takes a lot of time on the charts to go from high time frame to low time frame analysis every time. And it's not a very challenging topic. Like it should be an intermediate video. Excuse me. It should be an intermediate video, but I put it in advanced because it takes time to recognize the patterns on the charts to be able to go, okay, we're on the daily time frame here. We're not just looking at candlesticks, we're looking at the entire market, fundamental analysis, technical analysis, and future outlook analysis, which is kind of sentimental analysis. How do we feel about the future? So starting technical analysis on a higher time frame allows traders to view the market from the top down. High time frame shows the bigger picture of what the markets are doing. The weekly, daily, and 4-hour time frame are the best for analyzing from the top down. So we're gonna mainly stick to that 4-hour, 1-hour daily. And we're gonna really go over price points, and we're gonna go over how top-down analysis can help lead you into 1-hour analysis and 15-minute analysis. So I did put a picture of Euro USD top-down analysis, okay, on the weekly all the way down to the 4-hour. So I'm gonna go ahead and show you guys that real quick. So the market is in an overall downtrend. We have significantly bearish weeks from 2021 to 2022. We have bearish trend. Now the market starts trending upward. Now we're in an upward trend, right? And this is the weekly time frame. So each candlestick is 1 week of price action. Now we bring it down to that daily time frame, okay? It's bigger now, okay? It's fractalizing into more data. So we see that downtrend on the daily. So we go from the weekly to the daily. We can see the uptrend occur, okay? Those large weekly wicks there at the bottom. You have like the bullish, bearish, bearish. You have that you can see there. It's bullish, bearish, bearish, and then starts actually trading higher, right? You have like a lot of consecutive weeks of bullish price action. And then on the daily, it's just a little bit more clear. You start to get these retracements, kind of this wave pattern. So you have a 1, 2, 3, 4, and a 5. Okay. And then on the 4-hour, right? 1, 2, 3, 4, 5. But now you start to have sub waves. So you have 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, and 5. So that's that top-down analysis, right? Now let's go to the 1-hour. Okay, boom. And on the 1-hour, we can only show this part of the 4-hour from June into July. So remember, we have this move here, okay, this arc. Okay, we see up from June, it's up, down, up, down, up, down, up, and down. Okay, that's the 1-hour time frame, right? So now we're going to actually go to the chart and I'm going to show you one more time. We're going to start on the daily, okay? Ready? Up and then down. So that was the exact move that we were just looking at. Okay? Look at it. Okay, boom. Up, down, and then now on the 1 hour. Now on the 1 hour, look how much bigger it is on that smaller time frame. Up and then down. And you put that into perspective, that's an entire 84 days. So we're trading every single day. So I mean, we're trading every single one of these little opportunities that are happening within that overall trend, right? Like any of these opportunities that are occurring, we are trading, right? So we're going to go back to the daily and we're going to really think about this for a moment, okay? We're in a downtrend. We are in a downtrend, right? The market, if we take a Fibonacci, which you guys should be very familiar with, if we take a fib from the high to the low, we literally had a spot on, like literally a spot on 618 retracement. Like to the T, we had a 618 retracement. And if we take a horizontal line, okay, and we draw in a horizontal line, we're going to get rid of the fib, okay, and we go to the left. Let's go to the left, okay? Okay, we don't even need to look past them. That's fine. In 2008, the euro was at a peak, right? And then it finally dropped back down and it was very choppy. Okay, so this is we're looking at year after year. So we're continuing to see what? We're continuing to see Elliott wave formation to the downside, right? So we're in an overall bearish trend on the euro. Okay. And then it just absolutely dumps in 2014 and 15, consolidates, okay? And now let's see where price finds support. Let's see where price finds support, okay, on the daily. We have a nice daily support at 112. I'm sorry, 100. $1.12. $1.12, 756. Notice the daily wicks. Look how concise they are all along that that $1.12 line. Price breaks below, trickles, whatever, comes back up. We have a nice resistance candle here in 2015. We have another kind of resistance downward, and then it just could not trade very far past that 112. Okay. Came back down, came right back up to it, consolidated again at that level, resisted back down, trades right back through it, right back down, through it again, down. Look at the wicks on the $1.12, okay? We continue to go further and further. We see how large of a resistance we see in price. It just keeps flipping back and forth, back and forth, back and forth. And then, oh my God, look at that massive wick in 2016 all the way up 277 pip wick. And I believe 2009 was, I'm pretty sure to 2016 November 9th was the presidential election when Trump got elected, if I'm correct. That should be correct. Around that time in November is when we had the presidential election. So very fascinating candle there as well, right? Markets drove down, came back up in 2017. 2017, it's climbing past that level. It goes ahead and trades way past 112. Okay, comes up all the way to $1.25, then goes ahead and comes lower all the way back down to what? $1.12 again. And what does it do? Trades at that $1.12 level as a support, not a resistance, as a support. Then we start to see sellers take over in 2019. 2019, boom, finally trades below $1.12, comes back up, and then just in, well, COVID, if you guys remember COVID, that rocked the world, and we see that a lot on every single chart. A massive move to the upside to $1.14, but then crashes back down. Boom, what happens? Markets shoot up, so euro shoots up, goes all the way back up to $1.25 again, $1.24. then comes trickling back down in 2021 to $1.12 and just does not last very long at $1.12. And I mean, if we look at this too, when it hit $1.12, 99 days of consolidation at $1.12. 99 days of consolidation. And then the market absolutely took a tear to the downside. Okay, so here we go. Trickles all the way down to the lowest point in history at 95 cents, which is unbelievable, by the way. Trades back higher, right? Trades back higher into 2023. And then in July of 2023, it hits that same $1.12 mark one more time before trading downward. So just looking at the daily time frame, we noticed one price level that you could have taken multiple opportunities from throughout the last decade, right? Of course, you and I were not trading in 2010. So now that we're looking at the daily and we're thinking to ourselves, okay, we're in a downtrend. We got that 618 retracement at the most, one of the most prominent levels on Euro USD. What am I looking for tomorrow? What am I looking for in the next week of price, right? So if we're in a downtrend, we're in an overall downtrend and price rejected that $1.12 level pretty heavily, we can kind of think to ourselves that, wow, we're still probably pretty bearish. So let's continue to look for bearish opportunities. We know that we're bearish. Let's go ahead and go down to the 4 hours. So boom, in our head, we're bearish. We're looking for sells. That's the whole point of high time frame. Is we're looking for sells. We're looking for sells. Okay. We're gonna go down to the 4 hour, right? Boom, price hits $1.12 and just starts melting. What do we do on the 4 hour? We zoom in and we look for areas to take sells from. Once price trades away from $1.12 and you see this beautiful slump off, you're looking for a retracement. So you're going to pull out your fib tool and you're going to look for a retracement. So for example, and we're going to zoom in really nice, by the way, zoom in super, super flowy. Boom, hits $1.12, rejects, trades lower. This massive candle indicates that we're big selling, right? We take our fib, okay? We take our fib and we look for significant price action. Where's our best area where price comes in and supports at? Right here. We call this a support. Price finds an area and buys away from it. Okay, that's $1.10. It trades higher on the 4 hour. What do? We take our fib from this high to this low and we extend it outward. We look for what? Sell positions at the 50-618%. So boom, 50% and 618%. 50-618. We put our stop loss at the previous area of, I don't know. Shit, this is only a 26 pip stop loss. That's nothing. So we take two positions at the 50 and the 618, and our TP is generally the low that it bought up from. So boom, we'd have a low of 106 pips. That would have been the position to look for a sell, right? So boom, price trades away. Price trades from that fib. Boom, we're still in a downtrend, right? Where did price create that low from? That support right here, right? Once price breaks that area here, right? It breaks that area here and creates another low. We now have a new range to trade from. We extend this outward, and that is where we want to look for our next best area to take a sell from. And to even get another confirmation, we take our Fibonacci, we take it from that previous high to our new lower low, we extend it outward, and look at that. We have a beautiful 50% retracement on the 4 hour time frame. Fib, we could take our fib and put it just above the 618. And mind you, we would have had two positions pending. We would have had the 50 and the 618 position pending, right? The 618 position did not get hit, but the 50% did get hit. Our TP is what? Previous low, right here, previous low. So another 103 pip TP low. So price activated on July 23rd, and it took 5 days to go 100 pips. That's not a terrible trade. That takes a lot of patience. But then if you catch that trade and you see price trade away from your 50% and it breaks this low here, you can continue to enter sell positions all throughout here. So you can just continue to sell, like literally just keep selling, sell, boom, retracement, sell. You understand? Okay, beautiful. So price then trades lower, right? It makes a what? Support. We have a new support area right here, right? Price trades below the support, and now we're looking for what? The same concept. We're okay. We have our new lower high, which we take our fib from. We draw it downward to our lower low, and we're looking for our retracement off the 50%. Okay. So we're looking for our retracement off the 50%, right? Notice the candle on August 4th, the 5 o'clock candle, the 5 o'clock and the 9 o'clock candle. It rips, absolutely rips through the 50%, 618, and the 80%. I mean, absolutely rips through it. Which means you lose your trade. So you would have lost that trade. But you lost 28 pips. You only lost 28 pips. No big deal, right? So boom, you see that move happen. You see that move happen. All you do is you go back to the previous support that you had, that was over here, and you look for sells off of that support. Because remember, we were looking for sells off of this support, okay? This support and this support. We were looking for continuation sells, right? But it broke all the way through that. You lost that trade. So okay, boom. We're still selling, but price just went a little bit higher. So we go back, we take our fib, we go back, and now we take our fib from this high, this higher low, lower high, this lower high to this lower low, where this support is here. We extend it outward, and we take our sell positions from the 618 and the 50%. So just like that, you were given two positions. You are given two positions, okay, at the 618 and the 50%, and you're targeting the low of the support. Now, after that big move upward, it takes the market 10 days. It takes the market 10 days to completely come back to that lower low, right? That's a long time. Remember, if you're selling, you can still enter short-term sells. This is why this is an advanced lesson. Because the people watching this video, it's clicking for them right now. It should be fucking clicking for you right now. You should be like Spark should be. You should be turning the wheels right now. Because what happens when you catch that sell, you're in your position, you're on the 4-hour time frame, you're in your position, and you're like, you see that massive 2 4-hour candle tank off, right? Like literally, you're at a wick entry up here at the 618, and you're up 76 pips, bro. Automatically, you're like, bro, I'm looking for more sells. I'm entering more sells. I mean, all day long, right? All day long. So you caught that 618. Remember, we're targeting this low right here. We're targeting this low right here. So I'm looking at price on the 4-hour, and I'm going, okay, boom. It traded away. Okay, let's take our fib. Boom. Lower, well, technically that's the highest high, right? Because it cleared this high, but still it traded away. We draw it from this lower high to this lower low. Going to still use the same lingo. and we look for short positions at the 38.50. Doesn't retrace all the way to the 38.50, and then absolutely tanks again on the next 4-hour candlesticks. Okay. The next day, the next New York session tanks again, right? So you're like, oh shit, okay, I missed out. If you went down to the 15-minute and the 1 hour on that day, I guarantee you would have caught, excuse me, I'm guarantee you would have caught this position right here. You would have definitely caught that position right there. Yep, all day long. You would have caught that position. So that's the beauty of going down to the top down and out. That's the beauty of top down analysis. Let's just continue going on top down analysis. We're actually gonna go to the current price that the market's at, because we could do this all day, right? I could spend all day doing this. I could do this all day. Okay, I could do this all day, right? So check it out now. Remember, we were looking at price, right? And price was all the way up here at $1.12. It came all the way back to $1.11. So if we take a fib from this top to this bottom, it went 80% of the entire drop. So that was an 820 pip drop. It came all the way back up 680 pips. So 80%. It retraced 80% of that entire wave before coming all the way back down. And now think about it, right? We are technically targeting this low. Now, because we're in a downtrend, we're technically targeting this low, right? So if we're targeting this low and price came all the way back up to the 80 and then dropped, and remember, we're on the 4 hours, so that's pretty deep, right? Once we see that 80% retracement hold and price drops again on the 4 hour, what do? We find our support. Support is right here. We get our support, right? So it drops away, finds support, trades higher. We take our Fibonacci and we take it from the lower high to the lower low, and we extend it outward. And we look for sells at the 50%, 618. Never even hits your entry. You never even get an entry. You don't even trade for that week, whatever it may be. Your position just never got filled. It was just too choppy. Like price never came and filled your 50%. That's okay. Once price completes the move downward, right? Boom, it hits lower. It breaks that support. What do? We take our fib from the previous lower high to our new support, which is where? This low right here, where price trades away from, right? That is our new low, okay? And we take our fib, we extend it downward, and we take our trade from the what? 50%, 618. And we take it to where? The low. So boom, 77 pips. And this trade activated and hit TP within a day and a half. Now it consolidated here, right? It consolidated here for a while, actually, for a very long time. So boom, hits the 50, trades lower, you're in the bag, your money, right? It actually created a new low here as well. So get rid of the fib. So you just caught this trade. And also, you remember, you can also just take trades from the previous support that is now resistance. You can just take sells from that white line as well. You could totally do that. Absolutely. So notice that we're having these choppy lows get created. So we have a new low get created right here, right? That price attacks. Once price hits that low, it trades right back upward and then drops again and makes a new low. Okay? Makes a new low. Now remember, you sold right here. Okay? So this is your new lower high. You're going to take your fib, okay? You're going to draw it from this lower high downward to the previous support that holds right here. This right here would be that support. Where is it? Boom. Okay, this right here is your support, because look at the 4 hour time frame. Look how it explodes up like that. You see that? That is your new support. So you're looking for the same exact trade. You're looking for the same exact trade, the 5618. Boom. 50. Boom. 618. Right here. See that? You see that? You see that? Look at that. And then what do you target? You target that low. You target that one low. It's a little choppier. It's a little choppier. But you target that low right there. And price continues to melt. Let's keep going. Let's keep going. This is good stuff, guys. This is really great stuff. And not only that, is this support over here, it did revisit it one more time. Just to put it into perspective, it revisited it one more time. That's how strong a resistance slash support that 108 area was. Okay. So this is our new lower high. And now we have a what? Support down here. Okay. So now we have support. So now we take our fib. We take our fib. Also, I'm sorry, this right here, this previous support is now our resistance as well. So let me just put that into perspective. This is also an area where we think price could come back into. So now we take our fib from lower high to lower low. We extend it outward and we look for our 50% retracement. And it doesn't quite reach the 50. Barely. Whoopsies. Guys, it barely misses the 50% on this one. And it already targeted the low. Already targeted the low on that one. So that right, and we're at current market price of timing of me filming this video. We are at current market price, February 13th, 2024 at 3 o'clock in the afternoon. So, man, and you know, like I said, you can even take it from the white line. You could have taken that trade from the previous support at the 38% retracement. You could have done that. Absolutely. Absolutely. Could have done that. So now we are looking at price, right? It has a new support level right here. This right here is our new support level, right? Now notice how price trades below that level, right? And if I go down to the 15-minute, I'm going to go down to the 30-minute. I apologize. I go down to the 30-minute. Notice how price drops, retraces, hits that line, and then trades off of it again. So boom, it trades lower, goes down for another 22 pips. That's another trade that you could have taken today. That's another trade that I'm sorry, not you. We could have taken that. I was at the gym. I was at the gym at 10 o'clock. I wasn't on the charts. I watched this happen. I just didn't enter anything, you know? And what's funny though about this drop that happens, right, is that's a majority of the market movement. I mean, like, come on, bro. All that chop gets taken out in one boot in one blow. That's wild. But remember, we were on the 4-hour, we were looking for that retracement at the 50. We were looking for that 50%. And if that 50% activated, we would have been golden. You know what I mean? So boom, here we are. Tomorrow is Wednesday. Tomorrow's Wednesday. What are we looking for, right? I'm going to show you guys something really cool, okay? Remember this, we were looking at the last couple we were looking at within the last month and a half, almost 2 months, right? Check this out. Remember when we were taking our fib and we were drawing it outward? Remember when we were doing that? Right? And then we were looking for our 50% retracement, right? And then the 50% retracement never activated, okay? We have something called fib extensions. Check this out. This right here is a Fibonacci extension, negative 0.62% and negative 50%. Where did price support at within the last week? Look at this. Look where price came into and supported at. Right at in the middle of 5618. Remember, 50% and 62% are the best ratios to take trades from. And price retraced for 71 pips from that extension. Let's keep going. Let's keep breaking it down even more. Shit's probably going to continue clicking for you guys as I show you the fib extension levels. So boom, remember, price trades below this support that we were looking at, right? And creates a new low. And we were looking for what? That 50% retracement, right? Which we had. We got the 50%. Where's our extension level? Literally almost in the same place, right? Right there. Same exact spot, almost identical. That's crazy. Okay, how about the next one where when we took, right? We took our trade, boom, this support gets taken out, right? This support gets taken out. Technically, we're just going to do this one here. Okay, we take our what? Our fib from this high to this low. Where's our extension? Ooh, interesting. Our extension is down here. Our extension is down here. So now we have a new extension. We have a new extension level. Okay. Am I drawing this shit backwards? No, I drew that right. I drew that correct. Yeah. So after price breaks this support and it gives us our extension level, price is currently trading at the 50% extension level, negative 50%. Look where price is supporting from. Look where the price is wicking on the 4-hour. Interesting. So I'm thinking to myself, okay, we just had a new level get created, right? We have our next extension, which is all the way down here. So price is either going to support from this area of extension, right? And actually, if we extend this outward, right? Check this out. If we extend this outward, oh, that's crazy. There was a support and resistance at that level in the past. That's wild. Price supported there, resisted there, and supported there. I'm sure that might act as a support and resistance. So you could take a buy position and a sell position. Check it out. Check it out. Check it out. Check it out. Right? Check it out. If price trades back above this support level, okay, if it finds support in this rectangle and trades higher, we can take a buy position in that. Excuse me. I'm so sorry you guys had to see that sneeze attack. My allergies have been horrendous. Okay, here we go. We can take a buy position. We can take a short-term, very short-term buy position and look for what? Retracement from wherever the low gets created. Oh my goodness. Woo! All right. Let me continue. If price y'all are going to be making fun of me for this one. You guys are gonna be watching this video. You guys are gonna screenshot it. You guys are gonna send it in the group chat. Say, "Yo, Mason was freaking blowing wind on the video you made." Oh my goodness. Woo! Can't get over this. I hope you guys have been getting sauce though. This is probably one of my favorite videos that I've made so far. One of them. There's been some other ones that have been saucy, but this one's saucy. This is saucy right here. All right, let's continue. I apologize. So, right. So price trades into that extension. It can buy up back into our what? Our Fibonacci, wherever that low gets created, right? Wherever the low ends up being, wherever that next support ends up being, whether it's all the way down here, right? Or it ends up finding support in here. We're going to buy it back up into our 50% 618, where we then look for sells. Oh God, that was sauce, and that took way too long to finish because of my sneezing. But guys, that is top-down analysis at its finest. We're gonna get into the 30-minute real quick. We're gonna get into the 30-minute real quick, and we're gonna really, really break this down, okay? So we have our support level, right? We have that support level. Remember, we're looking for a Fibonacci retracement, right? We're looking for a fib retracement on the 4-hour into the 50%. So we are looking for price to come into this area right here, right? That is where we want price to come into. And once price finds support, and trades away from that support for about 35 pips, okay, on the 4-hour, you can actively take a buy and a sell from anywhere within that range. So on the way up to the 50%, okay, on the way up to the 50%, same concept, just flipped around. We have a support and then we have a what? Resistance. So this now becomes a resistance. Price trades above that resistance, which now makes it a what? A support. You take a buy position and you take a buy for a very small gain and a very small risk. So remember, you're trading within that range. So now we're on like that really small 30-minute time frame. And even if you continue to take a buy position, like that was a small stop loss. Like that's only 17 pips drawdown. And for a 32 pip TP, that's not a bad trade still. And you can still take small positions within that range. You know what I mean? I apologize. And then once you get up to that 50, you're looking for sells. You're looking for sell positions at that 50%, right? So once it hits the 50, you place a couple trades at the 50, and then it trades lower, right? So for example, let's say that it hit the 50 here, right? Let's say that was the 50. Check out how it drops downward, right? Comes back up to where? This area right here of resistance. So boom, another short position right there that you could have taken and targeted this low or this low, whatever it may have been. So there's always more to do on the lower time frame. You just got to get really good. You just got to get really good on the 4-hour, and then you'll get really good on the 30-minute. So guys, that's going to go ahead and end it for this video. Thank you so much for watching and putting up with my sneezing. It's unbelievable. We went ahead and filmed 2 videos today, back to back. I hope you guys enjoyed the sauce. I hope things are clicking. Let's get this back. Have a phenomenal rest of your day. Take care.